Hello everybody, my name's John Locke and I'd like to welcome you to The Winning Trade, but first, the required disclaimer material. This presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that your risk in trading options is substantial, and please make sure you're aware of all your risks prior to placing any trades. Also note that during this presentation, we will be using hypothetical computer-simulated trades and/or results. They're believed to be as accurately represented as possible, but keep in mind that live results can vary from simulated results for many, many different reasons. If this is your first experience with us, my name is John Locke. I'm a trading performance, wealth, and success coach with Lock in Your Success LLC, where myself and my team are here to help you win in the markets and in life as well. And today I'm here to guide you into the realm of high probability trading. Now in a moment, we're going to be going over the winning trade, but before we do, let me tell you what we mean when we talk about a high probability or income trading strategy. An income strategy is when we put ourselves in the position to make profits through the passage of time rather than solely depending on price movement alone in order to make money. Meaning we can often make money whether the price goes up, down, or sideways. Now this doesn't mean we're going to win all the time, but it does mean that our chances of winning are much higher than they would be otherwise. Now when you find that you want more information as you're following along, simply contact us at lockinyoursuccess.com, that's L-O-C-K-E in yoursuccess.com, or leave a comment on this video below and we can get those questions answered for you. So the Super Bowl is a trade we either do on the SPX or the Russell 2000. It's going to require a minimum of somewhere between $1,000 to $1,200, and it has a profit target of up to 100% or approximately $1,000. It has an exit loss trigger also of 100%, or is going to be approximately $1,000. In some market conditions, it becomes a little more. It is a little more in these market conditions, and you'll see as we demonstrate the trade. But since we take 100% loss on this strategy, we need to make sure that whatever size you trade the Super Bowl strategy, that you want to make sure it's appropriately sized for your account, where you could take multiple losses and still be okay from an account level. All right, so let's look at the summary of the guidelines. So what happens is when a monthly expiration cycle is 65 days to expiration, we're going to enter a bullish vertical, and we're going to use a call vertical, although you could use technically use a put vertical as well. But for our guidelines, we use a call vertical in a manner where the total potential profit in the strategy and the total loss of the strategy are about as equal as we can make them within reason. Now, there are some variations in the full guidelines, but in general, that's what we're going to be doing. And from there, the strategy is extremely simple. We do nothing. We sit there in the trade until the next or the following month is 65 days to expiration. So you'll see we're going to be entering an August expiration trade when we do this example. If we enter the August expiration trade, when August expiration is a 65 days to expiration, what we do is we just sit in the trade until September, the following month, is 65 days to expiration. At that point, that is the first time by the guidelines we are required to take a look at the trade. And at that point, if the trade is up money, in other words, if it's positive profit and loss, what we're going to do is we're going to simply exit the trade and we're going to enter the next trade for the next monthly cycle. If by chance the strategy is underwater at that point, or we're negative profit and loss, all we're going to do is we're going to keep that trade on, and then we're going to enter the September cycle anyway. And from there, if we're still in our original trade, or we'll call it trade one, what we're going to do is we're going to check trade one on a daily basis at that point. And as soon as that trade gets positive profit and loss, we are going to exit trade one. And then trade two is going to continue to be going at that point. And we're going to do the same thing with trade two. We're not going to look at trade two until the next, or the October cycle is 65 days to expiration, and we're going to do the same process. As you can see, this is very hands-off. Most of the time it requires looking at the market twice a month, and often only takes 2 to 3 trades a month, which is pretty cool when you think about it. It's very, very hands-off. So let me show you what an entry looks like for a Super Bowl. All right, let's take a look at the trade. So I'm going to come here into our analytical software, and what we have, if you're not familiar with this, is across the top we have our expirations. So this column is going to be our options that expire August 21st, 2020. They're currently 65 days to expiration. The actual date of this example where it starts is going to be June 17th on a Wednesday. And if we go down the side or the left column, these are our call options on the top, and this is each strike of a call option. And then we have our put options on the bottom. This over here is our analytical graph. Along the bottom, it demonstrates the asset price. Along the side, it demonstrates our profit and loss in form of percent of what we actually have in the trade. And on the right side here, it's our profit and loss in dollars. The straight-ish blue line here is going to be the value of this position at expiration day or in 65 days. The curved line is the value of the position as of today, or the projected value of the position, or any given price point of the asset. So as of right now, we enter here, we have a little bit of commission cost, and this is what our expiration graph looks like. Now you'll say, well, this doesn't look like a high probability strategy. And in fact, this is one of the more unusual strategies that we actually teach here. From a statistical standpoint, if you're looking at pure theory, the chances of this trading strategy working out is actually around 40%. However, you're going to find when we take a look at the statistics that the reality is much different than theory in this case. So let's take a look at the statistics. This is a back test of the Super Bowl following the rules that I demonstrated a little bit earlier. And what we have here is we have 118 trades. And the time frame is from January expiration of 2011 to current, or this date today, which is August 26, 2020. We've done 118 trades in that time frame. We've had a total trade return of 2,118%. We had an 86% win rate. Maximum number of consecutive wins in a row has been 31. The maximum consecutive losses historically has been 3. Just a note that, or a caution, is that when we do lose, we typically lose more than we gain. Our average loss is 2.7 times our average gain. And also, when you trade this strategy, you're not going to be using a whole account. You're going to want to trade it small. I would say the total trade size on this position should be 1/10 of the account value or less in order to maintain some sort of a reasonable risk management within the strategy. If you take a look over here, this is all the same information. It's just shown in a graphical format. So then the question becomes, how has the Super Bowl performed year to date in 2020? Remember, this year we had one of the largest down moves, or actually we did have the largest point down move that we've ever had in the history of the SPX. And a lot of trading strategies ran into some challenges this year. The Super Bowl, however, has been doing extremely well. So when we take a look at the Super Bowl, these are our month-to-month results, and they're based on expiration cycle. So when we talk about our January results, that was the January expiration cycle options. So the date started before January 1st. And when we're looking at our September, you may notice it's not September yet, but we're talking about the September expiration cycle. And the September expiration cycle is already closed, by the way. For closed trades, this is what we have for performance thus far in 2020. So we have a 59.3% win in January, 59.1 in February, 51.1 in March. In April, we lost what we call 107%. The reason we can go over 100% is because in certain market conditions, when we enter the strategy, we don't have a 1-to-1 risk-reward ratio, yet we're still using that $1,000 planned capital just for the purposes of record keeping. So it is possible from time to time to go over our 100% number. In May, we gained 15.1. In June 13.1, July 56.6, August, which is the month we'll be going over, is 27.6, and September we had a gain of 47.1 for a total year-to-date return of 221.9% when we say trade for trade. Now, I talked to you earlier that we cannot, or we should not, trade this strategy at the whole account size. We should, at a maximum, do 1/10 of the account. So if we take a look at the trade size we're going to be utilizing is going to be a $1,000 trade size. So if we're doing a $1,000 trade size, we should have at least a $10,000 account. And if we had a $10,000 account and we correct this for an account return based on our trade size, then the account should have gained 22.19% or 1/10 of our total trade for trade return. So either way, fantastic, fantastic returns on a simple strategy during a very, very crazy market year. So let's take a look at this trade here. This is going to go very, very quickly since we really only have to look at it twice. So this is how much work this actually is. Okay, so it's June 17th. I'm 65 days to expiration. At that time, I had a trade on. This was my July expiration trade. When I put this on, this was positioned the same way we're going to position the August trade. And thus far, since I entered this trade, I've done nothing. I haven't had to look at the market. I haven't had to do anything. Now, I look at the market every day anyway, but theoretically, if this was all I was trading, there was no need to do so. So I come in here and I notice my August from in July. I notice my August is 65 days to expiration. I go, oh, I wonder how my July position's doing. I come in here, I check out my July position. Oh, it's up money. It's positive profit and loss, $568. So we close it. And I just simply close my vertical. And then I look at opening my August. Now, one of the things I do is usually when I enter this, my long strike is going to be about at the money, or it might be a little bit over the money. So there are some rules on exactly how to enter this, but just for the sake of this demonstration, without getting too technical, generally my long strike is going to be at the money or maybe 10 points over the money. I'm going to take a look at my risk-reward ratio. Most of the time, historically, I'm going to be at about a $1,000 gain and about a $1,000 loss. Usually, I'm at like an $1,100 gain. With the implied volatility skew the way it is, for those of you who know what that is, it doesn't allow us to do that. Now, even if I took this and I did a vertical at 3140 and 3160, I'd still have a risk-reward ratio out of whack. That's very unusual, but that's what we're dealing with right now. So I go in and I analyze different strikes, and I notice that this one's going to be the best one that I can be in. So I enter this trade, and for the purposes of this demonstration, this is a $1,000 planned capital position. Even though I have about $1,200 in the trade, I have a maximum loss of that whole $1,200. I have a potential gain in this case of about $800. And I enter the trade and I do nothing until September is 65 days to expiration. It's going to be, looks like 28 days. So what I can do is I'm going to shift over to the next adjustment and then ignore today's trades. And this is what we look like. So we've gone from basically a whole month, 28 days. We come in and we say, oh, September is 65 days to expiration. I wonder how my trade for August is doing. So I come in and I notice my trade for August is up $278. It's up money. I close the trade. And then I enter my September position essentially the same way. You see we get a little bit better risk reward here for September. We're a little over $800. Things are starting to normalize a little bit. But this is my entry for September. And it's as simple as that. A really incredibly performing, high probability strategy that's super simple and has done fantastic in a crazy, crazy year. And that is a Super Bowl, this episode's winning trade. Now, if you'd like to learn the Super Bowl, this is a free trading strategy that we teach as part of our Go membership or our Guidelines Options Trading membership. So I encourage you to come on over there and check that out. We are open for enrollment this week. So if you're watching this live or within a few days of the live presentation, enrollment is open. If you'd like to learn strategies like this and other great strategies, then come on over and check us out. Or at the very least, come on over and join our free basic membership so you can get in touch with our community and see the types of trades that we do. All right, so if you like what you see, I encourage you to join us and discover how you too can follow along with this and other great strategies as they unfold during our weekly Options Trading for Income webinars, and where you can also learn about upcoming winning trade presentations and our Trading Success Blueprint. And perhaps best of all, you can get free information about our free Trading Performance podcast, where you can learn to become a much better, more effective trader, regardless of the type of trading you do. If you have any questions or comments or anything you'd like to see in the next winning trade, we'd love to hear from you. Simply comment on this video below so we can get those questions answered for you. We would also encourage you to come on over to thewinningtrade.com. That's thewinningtrade.com, where you can find past episodes of The Winning Trade, as well as a lot of other fantastic information on how to profit through income trading. And please remember to comment and subscribe to our YouTube channel, where I will personally answer any questions that you may have. Thank you, and we'll see you on the next winning trade.